Well, howdy there, folks. We're talking a little Tesla in today's video, talking a little Ron Barron. Got some awesome clips to react to here. Already mixed up here. Ron Barron. Let's hear what he has to say about Tesla, and then we'll get into the bond one. This should be intriguing.
We always do, but then when I sort of broaden it out and talk about the markets and some of the other companies that you're invested in, there was an analyst call just yesterday, this is HSBC, which really initiated coverage. They said that their price target was $146. I assume you probably looked at this and probably laughed given your very bullish views on Tesla. But what was so interesting about the report was that they really were trying to define the company as an EV automobile maker. Is that the way you think about this company?
I think about it as a technology company that's providing services to their own company and to others. They can't possibly be matched by anyone else. They have data.
You can call Tesla an automaker. You can call Tesla a tech company. You could call Tesla a freaking utility at this point. Literally. Think about the supercharger network. And now, like, every car auto manufacturer out there is going to want to basically use Tesla's system. They're basically going to be a glorified utility company now. And you think about their solar. As they build out a solar business, I mean, the Tesla's a lot of things, and that's what people got to realize. It's a lot of things. No different than Amazon's a lot of things. It's also a huge services story in regards to Tesla, right? This is like an Amazon type story where you have many growth levers all over this company.
They make cars cheaper than it was when Ford makes one of these cars, an electric car. Every car they make, they lose $36,000 on. $36,000 per car.
Ugh.
Our company now makes about $8,000 or $9,000 in profit a car. They were making $15,000 in profit a car. But if they build a plant that costs $7 billion for 1 million cars, that plant was making $15 million a year, $15 billion a year on a $7 billion investment. $15 billion on a $7 billion investment. An ordinary industrial company would make 15% on capital, 20% the most. This guy's making his capital twice a year. Now
okay. That's a way of putting it. That's why I love hearing somebody like a Ron Barron. He just put that so much differently than I've heard anybody really talk about it in terms of the investment versus what they get out of that investment. I love that part.
He's making it once a year.
You might want to rewind that and watch that again. It's not something you're going to usually hear many Tesla shareholders or Tesla folks in general talk about. That was a great point he just made.
$1 billion in a $7 million plant. So he's the lowest cost person. Everything about the business is trying to drive prices lower. Right now, they will be in the 1900s, early 1900s, the automobile companies were tremendous innovators. No longer is the case. In the 1950s, they decided they were going to go for profitability, and they outsourced all of their supply chain to their detriment. And all these companies went bankrupt. Hundreds of them went bankrupt. And now the way we're going is that their electric cars, they drive, I guess they have about 30 miles a day, 30 or 40 miles a day, and they have...
Okay, so a point he just made there, you know what industry that reminds me of? What he just talked about? You know, the auto manufacturers were tremendous innovators up until basically the 1950s, and then after that, obviously, you know what industry that reminds me of a lot right now? Is the smartphone industry. I feel like we're about to go into a dark ages of the smartphone industry where everybody kind of has their market shares. And I don't think a lot of these guys, including Apple, are going to be that focused on innovation. You're going to get very similar product coming out year after year after year after year. Maybe this is slightly better than everything. That's the auto industry for the last 60 plus years. My first car ever was a 1977 Mercedes. It was this old car that got like 8 miles to the gallon. This old Mercedes had features in it like windows that auto went up and down, except they were kind of broken, so because the car was so old, so I used to have to like try to pry it down. But it had features like that. It had auto locking doors, which didn't really work anymore, unfortunately, because the car was so damn old. But it had that feature. It had where you could set the speed, right? Cruise control, as you would call it, which was a feature that was, and by the way, that feature actually still worked when I had the car, thank goodness. Cruise control. There was a feature that, you know, really got it popular in vehicles in the 90s and the 2000s. And I looked at that car and I was like, damn, man, like this is a 1977 I'm driving around, and it feels like not that much different than like what a car was in 2008, 2009, 2010 in terms of features. Just the styling's a lot different, right? And that was auto sector. And that's why Tesla's come in and just knocked the doors off, because they came in and innovated on several different things at the same time, which completely changed the game in regards to auto manufacturers, right? And now everybody's trying to change the game and trying to copy Tesla. But damn, that's a hard proposition to try to copy, right?
3 million of them that are collecting data. 100 million miles a day they're getting for data, and then they're also getting compute.
And by the way, EVs will eventually go through a dark spell, probably after 2030. After 2030, you'll start to see innovation in EVs slow down in a substantial way. They're in a tremendous movement of innovation right now on the battery technology side, on the interiors, on the computers that run these cars, right? On the self-driving side. We're in an incredible time period of innovation, no different than the smartphone industry was in its first, 10 years. Like you look at 2007 through about 2017, how much innovation happened in that we can call it 10-year span. And the smartphone industry was absolutely amazing. And we're watching that. We're in that time period right now for the EV industry. But we'll eventually go through a dark time where there's not going to be much innovation anymore.
We're going to have more
it's years away
than
though.
anyone in the world in 18 months.
So
to train it.
Have you been surprised, and this is true of the other EV makers, a lot of EV makers have put up big goals in terms of sales, and then they've scaled those goals back, saying there's just not the customer demand. Do you think that is the responsibility or a function of the products that these other automakers are putting out? Or do you think that there actually isn't the demand for EVs writ large?
I go back I go right back to the smartphone industry. Guess what? In 2009, every freaking buddy wanted to sell a smartphone. Every damn company out there, 2009, 2010, 2011, they all tried it. And many of them didn't have the demand. You know who did have the demand? Apple had the demand. Samsung had the demand. And outside of that, all these guys tried it. Amazon freaking tried it. Did everybody forget Amazon launched a phone and then they found, damn, we don't have any demand for this thing? Just because you launch a product doesn't mean you're going to have demand for that product, even if that's the hot thing. And so what a lot of these other EV makers are finding out is, oh, damn, people don't want to buy our freaking cars. You know why? Because they don't trust our cars. Why would I want to go out? Why would I go out and buy a Ford EV, a GM EV, a Volkswagen EV, whoever, over a Tesla? It makes no sense. Like, this is what Tesla does. It's no different than if Tesla decided we're going to go make an internal combustion engine and then I go buy a Tesla internal. No, I'm going to stick with the companies that do that have been doing that for decades, that have that technology down, right? If we want to call it technology, that have that product down, right? I would go with them. Like, you're not going to go and get, like, that's just crazy. Like, you're going to go buy an inferior product? You buy any of the EV in the world outside of a Tesla, you are buying an inferior product. And if you're going to buy an inferior product, you have to buy it at a price point that was significantly under whatever the premium product is, right? And so in China, people can undercut Tesla. In America, in Europe, that can't happen. And so that's why Tesla's winning in America and winning in Europe, and why they're struggling a little bit more, because they realize, damn, these guys can undercut us with 20K vehicles in China.
Paid or expected?
There's 1.5 billion cars that have to get replaced. They do about 80 million cars a year, and a small percentage of those, 10%, are electric right now. Ultimately, it's going to be all electric. But the reason there's not more demand is the cars that are out there are not very attractive by the dealers, by the car companies.
Exactly.
And they're expensive, number two. Exactly. And then in addition to that, the dealers who sell them, they don't want to sell them because there's nothing to service.
Exactly.
The dealers make all their money on servicing. So
yes.
Dealers sell them, they're not selling them.
Talked about trying to bring prices down, and that's something that Elon...
Exactly. 100%. Okay? The dealerships don't want to sell EVs. That's something I've been talking about for years. Kathy Wood was talking about that way back in the day. Ron Barron's been talking about that way back in the day. The dealers don't want to sell EVs. What are you going to service? There's not much. Of course, some things are going to go wrong here and there with EVs, but it's just not nearly as much in regards to maintenance or things going wrong versus an internal combustion engine. And so the dealerships, they make so much freaking money off service. Plus, they love you coming in, because then maybe you're going to look around the lot. Maybe you're going to want to buy something. Maybe you're going to look for a new vehicle for your kids or, your wife or whatever, right? They love that model. They don't want to sell an EV. Also, do you know how commissions work in regards to dealership model? I'll explain to you how, okay? If you're a salesman at most car dealerships, guess what? You don't make crap off of selling a new vehicle in general. If you're a salesman, you're very incentivized to ultimately sell a used vehicle versus a new vehicle in general. And so you have all these new EVs hitting the market. As a salesman, you might make $100 off that, $150. You don't make crap. Versus selling a used car, you can make a lot of money. Okay, if you're a salesman at a dealership, you usually make your money from selling used vehicles because you get a way bigger commission on that, or from basically trade-ins and kind of that gap between what the dealership's willing to offer versus what that customer ends up getting. You can make like 25% on that gap there. And so it's very important to understand, like the dealerships, they don't want to sell EVs. The salesmen, they don't want to sell these new EVs. No one wants to sell it. And the customers don't really want them to begin with. So that's a hard sell to begin with, right? That's difficult.
He's talked a lot about. At the same time that he's going to try to bring prices down, you have the potential for Tesla to become a target of the UAW, which of course just made this new deal with the other big automakers at meaningfully higher prices in terms of what those employees are going to be getting. What do you think about that?
I think Tesla's employees are the highest paid workers in the world as far as the automobile companies go, because they own stock.
As a function of the stock.
And that stock option would not be present in all instances if it were a unionized company. When the unions were in control of Fremont, as soon as they had trouble, they ran from it. Tesla took over that plant in Fremont after the unions had left, after the company had gone bankrupt.
The amount of people that I know that became millionaires working at Tesla over the last 5-7 years is a long list. I know so many freaking people that became millionaires and multimillionaires because they got a bunch of stock. And all those people were never happy. I asked them, how you feel about your pay, just your base pay. And none of them were ever happy about that. Like, I feel like I'm underpaid, whether it was people that I know that work in logistics or, in the factories or engineers or whatever. They all felt they were underpaid in terms of base salary, but they all got stupid rich off the stock. And so that's an interesting thing in regards to Tesla that not a lot of people consider.
There's a good story that one of the executives and then I want to talk about it.
Yeah, no, of course.
One of the executives who devised the pay plan for the employees was telling me that he's a small Jewish guy like me, and he was walking through a plant, and a large black man walks over to him, shaved head, tattoos all over the place, and says, Ira, are you the man who devised the pay plan for us? And he said, yes. He said, I want you to know that I'm the first man in my family, the first person in my family to ever be able to afford a home. And thank you very much. And so the workers there make more than anyone else by far, and their health care, all the benefits are better. The unions have been trying to organize Tesla, Toyota, all the foreign companies for years. They failed repeatedly. Why? Because those companies the union's not in business to keep the employees. Their unions have the power.
Before we move off Tesla, just for
by the way, the stock went down yesterday, not because of that report.
What do you think it is?
Because of Joe Biden, President Biden, who, by the way, I love what he's doing for Israel, but I don't like that much what he's doing in business. Some things I like. But he's the one who said unions should organize Tesla. That's what happened yesterday when the stock went down.
Okay, we'll come back to the Biden piece in just a second. Melissa Lee, I think, has a quick Tesla question because I know I want to talk to you about a whole bunch of other things. Melissa?
Yeah, Ron, thanks for taking my question. When you think about China, how do you think about the growth?
What the heck? Melissa Lee's just chilling around? That's a fast money lady. She just hangs around the CNBC facility all day. Just got to pop out. Hey, Ron Barron, I want to ask you this. I'm looking forward to this.
Because that's a key piece to the Tesla story. Li Auto reported its earnings yesterday and had strong EV guidance. It's gaining market share. I'm just wondering how you think about the competition, but also the weakening Chinese consumer. And have you discounted that portion of the Tesla story at all, given the Chinese economic forecasts out there?
Ooh, good question.
Tesla right now is doing about 1.8 million cars a year. When we started investing in the company 7 years ago, when we invested between 2014 and 2016, they were doing 41,000 cars a year. So 41,000 cars a year to 1.8 million, they're on their way to 20 million cars. China is about 1 million right now, of their 2.8 million. But a large percentage of what they make in China is exported from China to Europe. And the more they build in Europe, of course, the more they're going to save on transportation costs and duties. The idea is that China invited Musk in, and invited him in because the Chinese car companies have done very poorly for a long time. And the promise was that he's going to help them become better car manufacturers, and he's not trying to take over the market in China, better car manufacturers and develop a local supply chain. And so he's the only one that's ever been invited into China that's been able to not have a local partner to operate their business. So I'm convinced that they have good operations in China. The person who runs their Chinese business, the Tesla business in Austin, in fact, is probably in line to be important person at Tesla overall. He's Chinese, and he was brought from China to Texas and runs the business there. He's going to be in charge of all the automobile business. So I think the relations they have with China are exceptionally good. Both people are getting something from it. And I think that business will continue to grow. But he's going to open plants all around the world for low-cost cars. And wait till you see what's going to happen when all of a sudden they start selling cars instead of for $40,000 a piece, for $25,000 a piece, which is going to happen in about a year and a half. From their new model, the new model.
Big prediction. He says within a year and a half. Whoa.
They think is going to do 5 million cars a year. 5 million cars a year for the Model 2. That's coming.
Okay. Before we get to his Bond 3-minute video here to react to, there's two things I got to speak on. The $25,000 car in China. Let me talk about China first. China, really tough spot. It's super competitive in China, in the EV space specifically. That's where they have no competition. In the United States, they have no freaking competition in Europe. It's a joke. China's very serious competition, and a lot of guys trying to undercut Tesla left and right, and they're doing a pretty dang good job. And so China is extremely competitive for Tesla. With that being said, the Chinese consumer maybe, let's call it not in their best place right now, that will all pass. I'm very bullish on China over the next 5-10 years. I'm more bullish on India than China in terms of growth rate over this next 5 to 10 years, but don't count out China. They will get back on track. They were basically shut down in a pretty substantial way for about 3 years. And so they have a long runway of growth ahead. Don't discount China. Second thing is $25,000 car coming in the next year to year and a half, Ron Barron says. What do I think of that? I think no. I think no. I do believe in the next, I would say in the next 5 years, I believe in that. Yes. In the next 5 years, $25,000 Tesla. Yes. In the next 12 to 18 months, is Tesla going to be selling a $25,000 vehicle? The answer is no. Flat out no. Like, no belief in that, okay? That would basically put them at this time next year selling $25,000 cars. Not happening. They're going to have their hands full with Cybertruck for the next 2 to 3 years of a ramp. People got to understand this is a 2 to 3 year ramp that's about to happen with the Cybertruck, okay? This is not like, oh, we're ramped tomorrow. No, this is a 2 to 3 year ramp. Elon Musk has basically kind of forecast this. It's a whole different ballgame, whole different vehicle, and they're going to have demand for days in regards to Cybertruck for the next several years. Everybody on social media talking about it. Obviously, if we could drop down interest rates a little bit, that would help sell more Model 3s and Model Ys. And so, and the EV adoption is just going to continue to get bigger and bigger. Like, people forget, like, when people go to buy their next cars, more and more people are going to be thinking EV. And if you think EV, it comes back to Tesla at the end of the day, okay? So, $25,000 car is coming. My opinion is coming in the next 5 years. Ron Barron's opinion, it comes in the next 12 to 18 months. They're selling it. I don't think that's happening at all, okay? Tesla stock is the subject of today's video. One video and one video only for me to react to in this one here today. I want to react to the first 10 to 15 minutes here of Fast Money. They have a tremendous Tesla bull bear debate. Danny Moses of The Big Short is on this episode. Dan Nathan, one of the biggest haters of Tesla stock and Elon Musk out there, is on this episode. And you know who else? Dan Ives, the Tesla bull. Some crazy short-term stock price predictions are thrown out in this video in regards to where Tesla stock's going. One on the bull side, I'm like, he said the Tesla stock's going to what over the next 6 to 9 months? Another gentleman makes such a shockingly low prediction on what Tesla stock is going to crash to. I was like, what? Okay, this is a controversial, crazy video. I appreciate you joining me. There go the fireworks. Okay, I appreciate everybody joining me for this one. Alrighty, guys, let's get into this.
The stock was closing in on $300. Since then, it's dropped nearly 28%. And a new call from the street says shares could drop even more from here. A bull-bear battle royale coming up. Plus, Bitcoin Bonanza, the cryptocurrency on a heater of late, up over 30% in the last 30 days and more than doubling this year. Will this rally last? We'll debate that. And later, cue the NBC on...
We don't need to see all that.
Studio B.
We know.
In the NASDAQ 100 today, Tesla dropping more than 5%, its worst decline since earnings last month. The stock nearly 30% off its highs of the year. The move coming after analysts at HSBC initiated coverage of the stock with a reduced rating, slapped it with a $146 price target. That's 30% lower than today's close. Add to that increased competition in China. Beijing-based Li Auto posting sales growth.
Trade Desk is down like 30% after hours. You could be flipping my flapjacks.
It also posted better profit margins than Tesla. The stock has well outperformed Elon Musk's company over the past year, but is China still an opportunity for Tesla, or are the hurdles too high to jump at this point? There are many people who have been bearish of Tesla on this desk. Danny Moses, this is your number one short here.
Yeah, it still is. I was here July 18th, I think, right before they reported their second quarter. And quarter was okay, but they did miss second quarter deliveries. And then third quarter, obviously, CFO stepped down prior to that and then missed those numbers. And I think now it's really become a show-me story in terms of it's an auto company. And I think people are going to start to lose patience over time here for what this company is going to be over time. And so I don't think it was down that much because of the downgrade. I think it was an excuse. A lot of stuff going out there, Cybertruck delivery, et cetera. So I'm still short the name.
Isn't there something that we've learned from GM and Ford in their latest quarters, and that is the EV business is much tougher for even established OEMs? So why doesn't that bolster the Tesla?
And do I like Tesla as a short term? It's okay. It's okay. The one scary part is you're going to run into Cybertruck, right? And how quickly does Elon and the team ramp Cybertruck in 24? That's the one thing that could burn you as a short. So yeah, I do think it's one of the more attractive shorts if I'm thinking about the Magnificent Seven for the short term, though. But you got to be really good with your timing, because if you're not on with your timing in regards to Tesla, you will get absolutely slaughtered. By the way, Melissa Lee, because Danny Moses has been short on and off Tesla for 5 years now, she asked him in this, so you make any money in this short? Wait to hear his answer. That's going to be good stuff, folks. That's going to be good stuff.
Profitable at this point.
The other side of that coin is they still make automobiles that people need to find. You're not walking into your local Tesla dealership and saying, here's 65 grand, give me my car.
True.
You still have to finance these things. And even Elon Musk talked about higher rates being a bit of a drag. And we can't do this, I understand. But if you were to back out that $103 print from December of 2022 and just looked at this move from October of 21 to where we are now, stock's down 50%. And it's not coincidental that it top ticked right before the Fed started to raise rates. So say what you want. Company now has cut prices 6-7 times. Margins are going to be impacted, and I think we're starting to see it now.
Yeah, I think that's really the central point. What part of their story was their margins were unlike anybody else's, and so it traded on this really high multiple. So if those margins compress, that multiple should also compress, and you get this sort of double whammy. And I mean, we're talking about, are we seeing the whole idea of the EV adoption slow down in general as well, and then just rates higher, multiples lower?
Yeah, it's interesting. So looking through this very detailed report from HSBC, I think this is the most important point. Almost half of our discounted cash flow valuation of Tesla.
You know what? The Tesla shorts have another something very, very scary that I would watch out for. So I have a Tesla hedge on because I have a long position that has like $400,000 or whatever in the public account, right? And so I have a hedge position on, for basically hedging my Tesla shares, right? Something I would be very scared about. And if I was a Tesla short, straight up banking that this stock's going down, what I would strongly consider doing is especially if the stock moves down between now and next earnings, I would strongly consider probably covering, because the risk is that next quarter, Elon and the executive team basically say that margins are bottoming in the quarter they'll be in at that time, which is a springtime quarter, which is very much a possibility. Well, we could call it the late winter quarter, okay? Late winter quarter, January, February, March. It's a high probability that will be the low for Tesla margins, because you're going to have Cybertruck ramp, which is going to weigh on margins likely, because that always weighs, in the first few quarters. And then likely they're not going to have any more price cuts after that. I doubt they even have more price cuts from here. And so I believe that's probably going to be a low for margins. in that particular quarter, and then Elon and the team can signal that margins, if anything, are going to go up from here, and that could completely change the story around Tesla, what people are looking at. Instead of margins getting worse and worse, they're going to get better. So, I would be definitely considering before the next earnings report, which next earnings report for Tesla will probably be out in February, I would say. Probably early to mid-February is when the next earnings will be out for Tesla. So you maybe got a few months to play with here.
Our discounted cash flow valuation of Tesla comes from businesses that will not generate revenues and profits until 28 estimate, okay?
Energy storage, solar.
Well, those do. So here's the ones that are not generating revenue until 2028, okay? It's this Optimus humanoids, it's robots, okay? It's Dojo supercomputer, and it's fully self-driving. So those other ones are. And so I guess the point, and I think this is what kind of Danny's getting to, is if right now it's a car company, you know what I mean? And it's fine that if people believe in all those other advanced technologies, and Elon is the one to push those forward. And he probably is the one to come up with the best robot or come up with the best supercomputer or whatever. But right now, if you were paying $600 billion, or you were paying, to Guy's point, in late 2021, $1.2 trillion in market cap for that, there's a lot of things that have to go really well. And most of which, the adoption for electric vehicles here, you need to maintain share and grow share and make it more profitable, but then you need to be able to do what they had hoped to do in China. And so right now, just the competition and the pressure on pricing and their inability to kind of create the sort of elasticity that they thought they could do by the 6 price cuts over the last, call it, year and a half.
Yeah, we got to differentiate the competition between what's going on in the United States and what's going on in Europe and versus what's going on in China. Because I can tell you in China, the competition is absolutely brutal. Brutal with a capital B. It is so competitive in EVs, it's not even funny. On the flip side, Europe and US, it's pretty jokish. I would call it that, pretty jokish. Tesla's just clear as day the winner chicken dinner, and will continue to be for years to go in the future. But China's a very different story. China's insanely competitive. You have a lot of vehicle makers over there, producing these new EVs in the 20s, 20s at thousands of dollars, price points. And so that's just, really down there.
Elon Musk says that Tesla is planning to make 200,000 units of its Cybertruck a year once production starts to ramp up, with the potential for 250,000 a year by the year 2025. Speaking on the Joe Rogan Experience podcast, Musk admitting that manufacturing that vehicle has been much harder than the initial design. You've got shares of Tesla down about 33% from their July high. For the year, 1 year period, down just 11%.
So what is my view on Cybertruck and how many vehicles it could produce of Cybertruck over the coming years? Well, I would say this. Obviously, 2023, it's like a super minimal amount, right? 2024 is going to be a huge ramp year. I could see the way I know Tesla to ramp, even though Cybertruck's, I think the important thing everybody understands, because everybody's expecting the ramp to be as fast as it was for Model Y, something very important to understand about the Cybertruck versus Model Y is Model Y had a ton, and I mean a ton, in common with the Model 3. So ramping Model Y was probably the easiest proposition for a ramp that Tesla's ever had in their history, literally. Cybertruck's fundamentally different, okay? So they're going to ramp it very nicely in 2024, but maybe only get to 100,000, maybe slightly over 100,000 units in 2024, in my personal opinion. 2025 is a year they can probably scale it out to about, I would say 200,000 sounds about right. And then I think they're going to keep scaling it from there. I think they can get to 250 to 300,000 to 350,000 and so on and so forth. And then eventually they'll reach a sustainable number each and every year. But I don't think we even can predict what the sustainable number just in North America is for Cybertruck year. And the reason being is that we know there's so much talk and so much demand for Cybertruck, but we don't know exactly how much. Are we talking about there could be 1 million Cybertrucks sold just in the United States a year? I don't know about that. Is it 500,000? Is it 250,000? Right? I think it's a really hard number to predict between 250,000 and 500,000 just in the United States a year. I'm not talking about anywhere else. We know the United States loves pickup trucks. We know trucks are the thing in the United States, especially out on the West Coast. Like here in Vegas, a lot of people drive trucks. Arizona, it's insane how many people drive trucks. Like a lot of men prefer trucks over driving an SUV or a car. It's just the way it is. Go out to Texas. I'm sure you'll see a lot of the same. So we'll see where demand goes long term, but My prediction is just in the United States alone, probably between 250,000 and 500,000 sustainable per year just in the United States of America.